Hi, this is Lara at Elliott Wave Stock Market with a free DJIA Elliott Wave analysis for you done on Tuesday the 26th of October. I want to have a quick look at a big picture historical chart going back to the early 70s for the Dow. I'm pretty happy with this long extended rise to put a cycle degree wave 5 at the end here. Thereafter we have an A, B, C expanded flat correction to the downside unfolding at cycle degree for the Dow. Cycle degree wave B here is a 154% correction of A. The maximum allowable length for wave B in relation to wave A for an expanded flat correction is twice the length of A, so that's well within allowable guidelines. Wave C is often 1.618 the length of A. That's the most common relationship between the two for an expanded flat, but in this instance, because wave B was such a deep correction and 154% length of A, the most likely relationship between A and C for this expanded flat will be where wave C equals 2.618 the length of A, which will be achieved when the Dow falls down to 2,278.84 points. This wave A lasted a Fibonacci 3 years, wave B lasted a Fibonacci 5 years. It's therefore likely that wave C will take the next Fibonacci number in the sequence and last 8 years. Taking you now to a daily chart, where this maroon 2, the end of primary 2 within cycle degree wave C, is up here, and here's an impulsive structure to the downside with some pretty strong volatile impulsive wave movement and wave behaviour. Thereafter, corrective ABC to the upside, and this upwards movement in comparison to this downwards movement is very corrective in comparison. The Dow is very, very close to its maximum allowable upwards limit for this wave count. If we see any price movement above, not at, but above 11,254, then this wave count will be invalidated, and that means that we will have to see this upwards movement as a further extension of primary wave 2, which means that this downwards movement would have to be counted as a B wave, and that seems extremely unlikely that this very strong volatile downwards movement could possibly be counted as a B wave. So I'm pretty confident that this upwards point should not be breached for the Dow. That seems the most likely scenario considering wave behaviour. We will have a confirmation of a big trend change only when we can see a full candlestick that's closed and over below the lower edge of the small pink parallel trend channel drawn here on the daily chart around C pink. This is Elliott's technique. Draw first a trend line from this low labelled 2 green to this low labelled 4 green, place a parallel copy on the high of 1 green. When this trend channel is breached to the downside, then we can expect the trend has changed from up to down. This technique works pretty well, so we should use it. Within wave 2 blue, wave C pink is now 174 points longer than equality with wave A pink, which is only a 13% variation, so they're not that close to equality, but it's a reasonable variation. Within wave C pink, wave 3 green is 48 points longer than equality with wave 1, and wave 5 green is 20 points short of equality with wave 1. So these three waves are reasonably equal in length, with 3 being the longest, and 4 not moving into 1, therefore all those rules are met. Within wave 5 green, wave 3 orange within it, which is not shown here but ends up here, is just 2 points longer than 4.236 the length of a short little wave 1 orange to start this, which is an exceptionally close Fibonacci ratio there. But wave 5 orange has no Fibonacci ratio to either 3 or 1 within 5 green. Taking you now to an hourly chart where this recent high here is now up here, and here's the end of that upwards movement for the Dow. And I've looked at this piece of downwards movement very carefully on a 15-minute chart to get this labelling for you. We can see a nice impulse down. I've labelled 1 purple, thereafter an ABC expanded flat for a second wave, another very nice impulse down which is exactly perfectly equal at 70 points to wave 1 purple, thereafter a perfect but very rare A, B, C, D, E expanding triangle in a fourth wave position. Wave 4 perfectly touches the end of wave 1. The rule states wave 4 cannot move into wave 1 price territory, therefore that rule is met. It can touch the same point, but it cannot move beyond. Thereafter, another impulse to the downside for a fifth wave to end a 5-wave structure to the downside. Thereafter, it looks like we're looking at an A, B, C short little zigzag and B looks like it's a contracting triangle, which since I did this chart and this analysis, looks like most likely that it's over with a short little C wave that was probably very close to the longest or widest part of this contracting triangle for wave B. So I expect it's fairly likely to be over there. We should be seeing further downwards movement today from the Dow. This wave count will be confirmed when we see price movement below 11,085 points because wave 3 orange must move beyond the end of wave 1. Once we get to that point of price moves below this point, we'll have more confidence that the trend is down. However, just going back to the daily chart, I still want to see a full candlestick outside, closed and below the lower edge of this pink channel on the daily chart for that final trend channel confirmation. There are 3 possible directions for the Dow for the next little while. It could go up and it has just 7 points to work with. We could possibly see a slightly new high. It could go down and confirm this wave count, or it could also just move sideways for a couple of days, and that's entirely possible. Sometimes around the time of a big trend change, we do see a little bit of sideways movement before that new trend gathers a little bit of momentum. That may be what's going to happen here for the Dow. I hope this helps you in your trading. And if you would like daily analysis of the S&P 500, you will find it on my Elliott Wave stock market.